Hello, everybody. Welcome to the weekly wrap up. My name is Drew Dosek. I'm stepping in for Gareth Soloway. He is out of town today, but I want to bring you all the information wrapping up this week's trading action here in the stock market. Now, we did have positive weeks on positive week for the Qs, the spiders, and the IWM, as well as the SMH. All of them are green this week, but we did start to see some cracks in the glass, meaning that some stocks were popping up and then selling off most of the day. And we saw a lot of that going on today, particularly with Hood, with Coinbase, both of which making brand new all-time highs and then selling back down on the charts. We've been talking about this. If you've been watching Trading the Close, we have been extended the likelihood for some sort of pause consolidation, which has been occurring this last week. And we'll look at that here in a moment, or at least a pullback is in order for us to continue moving up on the charts. But some of these valuations are really getting out of hand. A lot of these stocks, especially the high flyers, doesn't make too much sense. Anywhere that there's AI involved has just seen a large inflow of capital to it, really pushing the envelope for why are we going to continue to invest in these stocks with these high levels. Now, also this week was crypto week. So we had a big push in different cryptocurrencies. Bitcoin hit a brand new all-time high. XRP started ripping up, made a brand new all-time high. A lot of the other altcoins were pushing up and gaining strength too. So it was a great week for cryptocurrency. So let's jump into some charts to take a look at what's going on and what happened this week. So first up, we look into the SPY 500. You see here, we're putting in a lot of sideways consolidation right here, which really is needed to kind of bring down the momentum, at least pause, cool out before we can go higher or break down lower. But if you notice, we're right up into resistance area here on the SPX. And then today we opened up, gapped higher, looked like the markets were just going to float higher towards the end of the day. And the end of the day today is options expiration. Price did not continue moving higher as we see here on the chart. Price retreated nearly all day. I can show you that here on the 10-minute chart. We gapped higher, sold off, got a small bounce, continued to sell off, putting in more 10-minute bearish consolidation. So back to the daily chart. Should we continue falling next week? First area that has caught support so far is right here on this inclining trend line, right at 62.56. We'll see if that gets broken. If it does, this target then becomes available to be tagged right now at 59.42 on the SPX. Next up, we got the Qs. Qs did poke above yesterday, close above this long-term inclining trend line, and then today price is retreating. So we don't have a confirming move of a breakout above this trend line, all of which tells me, folks, we're implying that we're running out of steam pushing the markets higher. Look at that angle of trajectory too. It's not up and sideways. It's really just an angled up trajectory, which typically stalls out and reverses price action. First area support, 523.42. Next up, the SMH. Notice the SMH here attempted to break out into this parallel channel, however, has not yet confirmed a move into this parallel channel. If I scroll back out on the chart, you can see where this parallel channel is derived from and how price action contained it for the first half. And then the second half, price has completely fallen off a shelf and now since returned back, fighting its way all the way back up. Ultimately, though, look at what sort of extended move happens. You don't have to, again, to understand how price moves in stock markets, simply look back on the chart. Look what happens when you have a sharp move up. We have a sharp move back down. We have a sharp move down. We have a sharp move up. That's how these prices behave and act on charts. So we have a sharp move up into resistance, making brand new all-time highs. It likely is going to result in a sharp move down. We'll see. That should be coming in the near future. But one caveat, we are in summertime, folks. Summertime in July typically implies lighter volume, which is also harder to get sell-offs in the stock market. So with that being said, the sell-offs may be a little bit minor until we get into higher volume situations. Maybe that might be a new news coverage break that happens. It certainly could be triggered by almost any new tweet that we've seen come from this administration, or even tariff news and development on that front, all of which could put downward pressure on the markets and literally can be the straw that broke the camel's back. Next up, IWM. Now, IWM, it faltered a little bit this week with bank earnings, but has since recovered, pushing price back up above this declining trend line right here. Now, we have not yet confirmed above this declining trend line. I'll be looking for that early next week. If we go back on the weekly chart, we can see green week here on the SMH, green week there. If we go to the QQQ, green week there. we go to SPX, which is the S&P 500, green week there. So again, guys, green week, all good. Most retail investors will think nothing's wrong, keep investing in the market, which ultimately is going to be exit liquidity for some of these high-flying names. Into Bitcoin. Bitcoin put in the mammoth topping tail this week. Notice how we did tag a measured move on this move up too, from an inverse head and shoulders pattern defined with this neckline declining right here. Price has since gone up, created that topping tail that we mentioned. We've already accomplished the measured move, come back down, and is now consolidating. This near-term price action is bearish consolidation on the chart. Bitcoin, if it does continue to fall, 113,278 is going to be the first support area that I'm interested in, and mainly because there's a lot of investors still interested in Bitcoin. Folks thought that they missed this run. Any pullbacks from new all-time highs, there's going to be eager buyers waiting and will step up and likely support this area. If this area gets broken, next area support is going to be this inclining 50% area of the parallel right at $109,657. Next up, we've got gold. Gold here forming a wedge on the top of the chart. This is all bullish consolidation at the top, but we've got a topping tail and we have a weekly topping tail on the charts. Even though this is bullish, typically bullish consolidation at the top of the chart does fail. So I'm favoring more of a downside on gold. First area of support is going to be this inclining trend line right at 32.55, followed by the top area of this parallel channel at $3,100. Next up, we've got silver. This has really been one monumental run for silver. All started right here, inverse head and shoulders pattern on the chart, neckline drawn out right here with a declining trend line that created the measured move of 38.97. Who doesn't want to be able to predict where price action is going to go on charts, guys? Who doesn't want to be able to know this, especially when this occurred? This was all the way back here on May 20th. We're talking about, if you could know and predict the future like that, think how powerful that is. Think how powerful that is as an investor. Understanding technical analysis. Take our educational courses when you can, guys. We're not going to be here forever. And especially if you're doing research on your own, you can find chart setups like this. They're all over the place. Every single day, there's new trading opportunities. I miss countless trades every single day. And it's okay. I'm still profitable. I still make great trades. I don't need to be in every single trade. But if you know how to isolate and pinpoint levels like this, you can make yourself a lot of money in the long run, because look how precise that measured move turned out to be. Now, if anybody right here on May 20th picked this price along with me, congratulations to them. They noticed this pattern that developed on the chart, but still every time it happens, it seems like magic. It's wonderful to watch, truly amazing, the power of technical analysis. All right, guys, so next up, US oil. US oil here on the weekly chart. You see here what we've been doing. We've had this big red candle and then 3 weeks sideways. That's bearish consolidation in the near term, telling me price is likely coming a little bit lower down here to this declining trend line, roughly about $60.60. Into nat gas today, poked above, and as well as the last 3 days, this declining trend line we see here on the chart, putting in some consolidation right on top of this, what used to be resistance. So now what happens is nat gas needs to get a close above this candle that was created on Wednesday, July 16th. If it's able to do so, next stop is going to be $4 right here at this inclining trend line on nat gas. Next up, we've got a few stocks to review. IBKR came out today with earnings, pushed higher on the chart. You can see here they did beat on both earnings per share as well as with revenue. And since then, price excelled higher, making brand new all-time highs. This is the weekly chart too. Now look how I found some resistance areas today. If you can see here, this pivot all the way back from the week of December 27th of 2021, string that price action out over the pivots of February 10th of 2025, and you're able to see this area, the top end of the trend line, where price pierced today and is coming right back in. If we go to the daily chart, you can even see both of these trend lines as displayed, and I didn't highlight the origin of the other trend line. That one's over here, March 15th of 2021. But both of these trend lines, as you see here on the daily time frame, are containing price action with this breakout right now. Usually when price breaks off like this, it creates a spinning top. This usually could be a blow off top, especially if the markets are under pressure next week. If you go into the 10-minute, you can see here most of all that buying pressure occurred in the first few 10-minute candles of the day, and then the selling commenced, all trading within these two trend lines. So nice move on IBKR, but still into resistance. If you notice the daily and the weekly charts, And then weekly now piercing above 70, daily chart here at 79.94. The likelihood that this consolidates or pulls back in is actually higher than pushing up on the charts. Next up, we've got Coinbase. Very similar situation here, except there's no earnings, but Coinbase ripped higher earlier and nearly sold off almost all of the day, briefly going negative on the day here on Coinbase. But notice here on this day's price action, brand new all-time highs for Coinbase. So applaud it, give it a high five, whatever you may say. However, this is crypto week. And if we are going to have a crypto week, we should have some brand new all-time highs in Coinbase. So I guess those two things do go hand in hand. We look here on the weekly chart, though. This is basically rapidly moving higher. We had some consolidation here, but then this move is just a dramatic move up, as displayed too on the RSI in the bottom of the chart. So we did make brand new all-time highs. We're not confirming above all our new all-time highs, as you can see here on the daily chart. We're not confirming nor moving above to close with brand new all-time highs. We at least just printed up here with new all-time highs. So with this sort of move and sell-off, we likely are going to come back on the charts. First area I'm watching here on Coinbase. Now, this wouldn't be a high probability trade set up for a long, but this is just the first area of support that I'll be watching to see if it gets broken or gets a bounce. That area is under 400 at 392.90 by this inclining trend line. Following that up, there's better support right here at 368.25. That area would likely provide a little near-term bounce on the chart of Coinbase, considering how overbought it is in the near term. All right, so into Robinhood. Robinhood, we see here, did push up higher on the charts. Now, notice this chart too. Look at the weekly. This chart, nearly all greens all the way up. Much different than Coinbase, where we had at least a few weeks of consolidation, but all this is just all the way up. 82.5 on the RSI, extremely overbought near term. Brand new all-time highs, etc. This stock just keeps ringing those bells that major investors love hearing. New highs, new highs, new highs over and over again. And you see the last time it did so with proper consolidation as far as on the daily chart was right here. We had decent consolidation at the 93, pushed higher, but right now with this move and this sort of candle going in towards the end of the day, that tells me price is likely getting exhausted. First area that I'm watching for support right here at $100. But more importantly, this inclining trend line showing the trend of what's going on currently in Hood. That's when we know the trend is over, is when this inclining trend line right here is broken. Notice it's only been hit twice, once here, and this originates from the April low. So just draw it over to the very next pivot point and string it out. Notice price never touched it through here. That's where I'm going to be waiting for Hood to come back down to see if we get more solid support and if this run is actually true and will hold. That trend line currently, if we come down roughly near price, is right around $93.59. Into Baba. Now, Baba, as you see here, had a fantastic week. This was one of the leaders this week as far as the mega cap companies with 200 billion market cap and higher. Baba pushed up 12.57% for the week. You can see here, beautiful run. Look at that big green weekly candle on the chart. Very nicely done for Baba. Notice too, in doing so, it's gapped up back into this wedge. Then today gapped up above the wedge. So all this week breaking in and out of the wedge. Fantastic move on Baba. I don't think this is done. There may be a little bit of pausing, but notice we're not overbought on the daily chart down here. So Baba can continue to go higher. Today we did tag our resistance at 122.08. Next stop is going to be 127.92 on the charts, roughly about $7 higher. Support for Baba will be right here. Notice these pivot highs at 117.43. If we do get any pullbacks, this would be a buying opportunity for Baba to move higher on the charts. Next up, AMD, another big winner of mega caps this week. We flip over to the weekly chart. Look at that beautiful green candle there on the chart, pushing up 10.46% this week. Very nice move. Also getting above another inclining trend line that was resistance for the chart. Notice how it rejected price right here. Then price bounced up right here at this point at 134.21 and pushed higher on the charts. Now, since we are above this trend line and have confirmed above it, that now flips this area. You see, it's like X marks the spot. Right here where the X is 151.65. Now, also keep in mind, look down here. We're extended. We likely need to come in. This is just the first area of support that has the potential chance to push price up to 169.69. This area, since we are overbought and it being the first area of support, will likely get violated, pierced, or move a little bit lower on the charts. The next area of support I like is right here at 144. It's strung together with this gap fill, as well as all these other pivots and also previous down areas on the chart. Right around 144 will be the area where I think if price starts selling off and AMD catches support, that could provide another rebound play and push higher on the charts of AMD. Next up, we've got Palantir already on the weekly chart. Palantir, another third place for the 200 billion market cap size companies, pushed up 7.25% this week. Nice push, but look where it pushed to. It pushed right into an inclining resistance trend line. Now, Palantir has been one of those stocks. It literally is defying gravity, except for this one little pullback we had in February through April, which every company did, let's be honest. So aside from that, it's returned its march higher and continuing on its merry way. But right now, time is telling me that at least for going upside, going straight up, that time likely is over for the near term. We will likely have some consolidation or maybe a slight pullback back down into this inclining trend line that you see here, almost like a parallel. These two ends of these trend lines are slightly closer together than the beginning. So it's more like a wedge, but they kind of look like a parallel at this time. Next area of support for a pullback down is going to be right here on this trend line at 143.30. Next up, and finally with Oracle on the weekly chart, Oracle pushed up 6.41% this week. Great push on Oracle, but it pushed right into resistance. Notice this long-term parallel channel, folks. This is a really big parallel dating all the way back here, all the way back to the dot-com bubble burst. So we've got Oracle's parallel, this longer-term 26-year-long parallel with price all culminating last week with a weekly topping tail. Looks like this week that weekly topping tail is going to be negated. However, even with this big push up, it's now slamming straight into the top end of this parallel, likely telling me with all this RSI overbought, guys, it's like a broken record. These things need to come back down. The markets are in euphoric mode during the summer. But again, I can't stress this enough. Summer, light volume, these things can float and stay higher than most anyone can anticipate. So will it happen? Will the sell-off come next week? Uncertain. We do have earnings next week, and maybe that might kickstart it. I've been hypothesizing that a lot of companies cutting guidance is really hurting investor sentiment in these plays, especially with high evaluations. All right, so next week we've got CMG on Wednesday, IBM, MAT, NOW, as well as Tesla, TSLA on Wednesday. Then we have Thursday earnings, Intel, Newmont Mining, and Deckers Outdoor, DECK. Plus, July 22nd, we have the Fed Reserve. Jerome Powell does have a speech at 8:30 in the morning. Aside from that, we're going to have other earnings plays, other smaller caps that should be market movers. I'm excited to be back in earnings season. There's nothing better than volatility for day traders and swing traders. That's where we capitalize on great opportunities, much like we've seen here on the chart today, as well as all through these other charts and indices that we've been displaying. They're all towards their overbought high-end scenario, really looking like the market needs to go on vacation, take a break, get some more rest so it can start moving higher or sell off. So we're right here at a crossroads, folks. Will the volume uptick next week with earnings? We'll see. But that wraps up this week, and that wraps up this video, guys. Thank you so much for joining me. I was happy to step in today for Gareth. He'll be back, as I said, next week. But until then, you all have a fantastic weekend. I look forward to seeing you then. Take care.